So a bit of an update today on Lantronix, LTRX. We last spoke about Lantronix in December of 2024, so several months ago. And at that time, it was at a price of $3.48 a share. It ran up a little over $1 a share at that point in time. But like most of these companies, there's been a substantial pullback, which creates another buying opportunity to acquire or purchase additional shares if we missed it the first time around, and just to get a bigger position in, because that rebound will be coming. Great things are on the way. Lantronix is one of these Internet of Things companies, small company, very small cap company, but they're enabling edge AI. So this is kind of the hot topic, to enable edge AI and edge AI in general, which is decisions at the peripheral instead of coming all the way back in to process. Lantronix sees themselves as kind of a leading player in providing Internet of Things solutions and secure access to platforms. Good partnerships with Qualcomm, part of the Qualcomm AI Hub. They partner with Cisco, Cypress Semiconductors, and many others. So it's a well-positioned company. Again, service data access, secure data access, smart cities, automotive and transportation, enterprise, connectivity, software, services, edge computing. They touch a lot of things. They've been a bit of an acquirer in recent years, as well as they recently closed a nice acquisition that should help both the top line and bottom line in 2025 and then years to come. So why is the stock dropping? Well, we've got overall tough sentiment in the investing world right now. There's been a bit of a slowdown, and when a portion of your business is the automotive sector as well, and enterprise sector, that's been a bit of a drag. Remember that this is a company with real revenue, and we'll take a little bit closer look at the fundamentals, as they've got a fantastic product lineup, and they are expanding that product lineup on a global basis. So with that in mind, let's look at the fundamentals and see how that lines up for us. Lantronix is trading at $101.5 million market cap. Quite small. This is a small cap company, especially when you consider that the revenues are running at about $31 million a quarter. So it's less than 1 times sales. So this company has real cash, real products, and it's cash flow positive, not yet GAAP income positive. On a non-GAAP basis, yes, but cash flow positive and decent revenues and a great lineup of products that are right where it needs to be for the future of things. And with a share price of about $2.60, it's down 37% so far year to date in 2025. The 1 year mark down 29%. Over 5 years, up about 29%. So it's had a rough ride of it in 2025, but all of that can turn around and change quite rapidly. They've got a nice lineup of products, ample liquidity and cash on the balance sheet, manageable debts, cash flow positive, which is the really important thing. Insider activity. Insiders own about 5.5% of Lantronix, and one independent director has made a small purchase, about $51,000 worth, at a price of $2.54 a share. So you're right there with that director if you buy now. And then the CEO has purchased over $200,000 in the company at an average price of $2.66 over the past year. Analysts dropped their ratings a little bit. It's still a consensus buy, and in some cases a strong buy. They've lowered their price targets into the $5 to $6 range. It had been a little bit higher, but at $2.60 a share, that means there's a lot of upside, and it just takes a whiff of economic activity ramping up, and some good whispers out there that a company like this would start to run pretty dramatically. With all of that in mind, I've got a sizable stake that I started increasing after the February earnings announcements caused a plunge, and I'll continue to add until I get to kind of my targets. Hope this helps. Let me know what you're doing.